So you may remember from our videos on the pension worksheet, there was that line item called amortization of unrecognized gains and losses. And we walked through how you would run that through the pension worksheet. But at the time I said we would go over the calculation of the amount in a later video. Here we are. So we need a few pieces of information in order to do this. We're going to do it for 3 years. The first thing we need is to know what our projected benefit obligation is at the beginning of the year for which we are calculating amortization. So at the beginning of 2017, we had PBO of 3.6 million. At the beginning of 2018, we had PBO of 4.1 million. And at the beginning of 2019, we had PBO of 4.4 million. Same thing for the value of the plan assets. At the beginning of 2017, we had 4.1 million. At the beginning of 2018, 4.3 million. At the beginning of 2019, 4.2 million. And then we need to know what our unrecognized net loss is. Again, these are amounts that occurred at the beginning of the year. So 2017, at the beginning of 2017, we had nothing. So prior to 2017, there was no unrecognized net loss. At the beginning of 2018, $900,000 was in the account. So that $900,000 effectively took place in 2017. At the beginning of 2019, an additional $800,000 went into the account. So that effectively would have been the unrecognized net loss from 2018. And then one more last piece of data. The average remaining service life of all employees is 8 years. Now what we're saying here is that, let's say we have 100 employees. If we determine the average time until these employees are going to retire, it's 8 years. Now, for some employees, it may be 20, for some 2, but the average is 8. So here are our calculations. We use what is referred to as the corridor approach. What FASB basically is saying here is it's entirely possible that if you have a net loss in 1 year related to your pension, you may have a gain in the next year, and they may actually offset each other. And that's why we're going to let you put them in accumulated other comprehensive income and amortize them over time. Now, what the corridor approach says is as long as the unrecognized net loss or gain doesn't grow beyond this corridor, you're not going to need to amortize anything. And that corridor is defined as 10% of the larger of PBO or plan assets at the beginning of the year. So in 2017, we had 3.6 in PBO, 4.1 in plan assets. The corridor then is 410,000 or 10% of the plan assets. Now, at the beginning of 2017, we had no unrecognized gains or losses, which means, in effect, for 2017, there's no issue because you're never going to amortize in the year that the gain or loss occurs. Your amortization each year will be based on what is your unrecognized net loss as of the beginning of the year. So 2017, truthfully, we don't have to do anything. 2018, PBO of 4.1 million, plan assets of 4.3. Again, plan assets are the larger of the two, so the corridor will be 10% of that, or $430,000. Our cumulative unrecognized net loss at the beginning of the year is the $900,000 that we incurred in 2017. Now, here's how we calculate the amortization. We're going to take the difference between the cumulative unrecognized net loss and the corridor. So in other words, we're going to take the amount of unrecognized net loss that is in excess of the corridor. But we're not going to stop there. We're then going to spread that over the average remaining service life of all employees. So we will divide that amount, which is what? 470,000. We don't have to amortize the whole thing. We'll divide that by the 8-year average remaining service life, and that leaves us with amortization for 2018 of $58,750. That will run through our pension worksheet. Same thing for 2019. PBO is 4.4, plan assets are 4.2. PBO is the larger of the two, so our corridor will be 440,000 or 10% of the 4.4. Okay, so the cumulative unrecognized net loss. This is cumulative, so be careful as you walk through the calculation. It's going to be the 900,000 from the previous year minus the 58,750. We amortized that amount, so we effectively took it out of the account, plus then the additional 800,000 that was incurred in 2018. So we now are looking at cumulative unrecognized net loss of $1,641,250. The amortization of that we will do in the same way we did 2018's. We're going to take the difference between $1,641,250 and $440,000. In other words, the excess over and above the corridor. And then we will divide that by the 8-year average remaining service life. And that will leave us with amortization for 2019 of $150,156, which we will then run through our 2019 pension expense on the pension worksheet.